Welcome to Breaking News to Trading Moves. We are zeroing in today on a single earnings report, but one that's actually giving us a pretty clear window into how things are moving across, well, the whole tech ecosystem. And this analysis is really built for you, the listener, to quickly get a handle on who's gaining some momentum and who might be facing some new headwinds competitively.
Exactly. And the central news item here is Intel's recent quarterly performance. Specifically, their Q3 results came in with a better-than-expected profit beat. So after this, Intel, that's ticker INTC, saw, a positive move. This was driven by reports of improved margins and demand holding up better than some thought.
Right. And Intel management pointed to, well, two main reasons for that result. Cost cuts, which they've been focused on, and also some fresh strategic investments. But I think maybe the key part was the underlying market condition. Demand for PCs and servers just seemed, well, better than feared.
That's a good point. The stock reaction for Intel itself is, just the start. What really matters for everyone else nearby and for what we're discussing is understanding why that demand showed up.
Yeah.
And, how Intel's success either helps or maybe hurts the plans of their partners and rivals. So we'll look at this in two ways. Where this news creates momentum and where it creates some competitive pushback.
Okay, sounds good. Let's start with the winners, then the ones getting a boost. When Intel does well in its core by 86 business, who usually benefits? I guess we start with the PC makers, the whole Windows ecosystem.
Yeah, that makes sense. The reasoning is pretty direct because the report specifically flagged a rebound in demand for Intel's client computing chips. The market's been talking about a big PC refresh cycle for ages, replacing older machines. Intel's numbers kind of suggest that this is maybe finally gaining some real traction, pulling those upgrades forward.
So it validates things for the hardware companies building those systems. We're talking about the big OEMs tied to that x86 architecture, right? The materials mentioned HP, ticker HPQ, and DELL, ticker DELL. So for them, the outlook seems a bit firmer now.
Absolutely. And it doesn't stop at the desktop. The positive signs seem to extend into the second category, data center and server builders.
Okay, now that segment's been a bit tricky, hasn't it? Enterprise IT spending seemed pretty cautious lately. So why did Intel's data center and AI group do better than expected? And how does that help the server builders?
Well, that division performed strongly because despite some worries, CPU upgrade activity didn't just stop. It seems like it's just been more focused. It's maybe not just the huge hyperscalers driving everything now. We're seeing decent activity from enterprises, maybe regional cloud providers doing internal upgrades. They need newer, more efficient chips like Intel's latest, especially for handling AI workloads.
Ah, okay. So these builders aren't just selling chips, they're selling the whole package racks, cooling, hardware designed around these new CPUs. So that upgrade activity keeps them busy.
Precisely. And that supports established players like Hewlett-Packard Enterprise, ticker HPE, and also those more specialized high-growth server companies like Supermicrocomputer, ticker SMCI. Their whole business is basically built on using the latest stuff from vendors like Intel.
Got it. Okay, that covers PCs and servers.
Yep.
Now, what about the third group of winners? This one's a bit less obvious, maybe. The U.S. semi-equipment suppliers.
Yeah, this is looking a bit further out, more strategic. These companies make the tools needed to manufacture chips. They benefit because, well, a stronger outlook for Intel helps stabilize things for the whole equipment sector.
How does that stabilization work exactly?
Well, Intel's got this big multi-year plan, right? IDM 2.0, investing heavily in its own manufacturing. When Intel reports good numbers and shows their turnaround is working, it signals that those huge spending plans are likely still on track. That spending commitment kind of acts as an anchor for the U.S. equipment companies. It gives them confidence that even if other chip markets fluctuate, Intel will probably keep placing those big, valuable orders for tools needed for future factors and better production rates.
Okay, so we're talking about the companies that provide the really advanced manufacturing gear, like Applied Materials, ticker AMAT.
Yep, AMA, and also Lam Research, ticker LRCX. Intel's success gives them important visibility into their future business.
All right, so we've laid out the beneficiaries. Now we need to look at the other side of the coin. Tech isn't always win-win, right? Intel's strength must put pressure somewhere. Who feels that competitive squeeze?
Yeah, absolutely. Let's start with the most direct competitors, the CPU rivals, the ones going head-to-head with Intel on PCs and servers.
What's the specific issue for them? I mean, if the overall market's okay, shouldn't everyone benefit somewhat?
Well, yes and no. The fight often isn't just for volume, it's for the most profitable deals, the high-end sockets. If Intel manages to regain some ground in those valuable server and high-performance PC areas, it immediately creates friction for competitors. They might face, tougher pricing pressure to win deals, and it could get harder to secure those really important design wins, getting manufacturers to commit to using their chips long-term. They have to fight harder, maybe in less profitable areas.
Okay, so that puts direct pressure on rivals who've made gains recently. Specifically, we're talking Advanced Micro Devices, ticker AMD.
AMD, yes. And also ARM Holdings, ticker ARM, especially as their designs increasingly compete with Intel's traditional x86 architecture.
Makes sense.
Okay.
Moving on. The next group feeling pressure, competing foundries. Now, why would, say, TSMC or Global Foundries care about an Intel earnings report?
This comes down to Intel's big push into the foundry business itself. Intel is using its improved financial position, plus government support and other funding, to build up its own manufacturing plants for others. This creates sort of a two-pronged pressure for existing third-party foundries.
Okay, what are the two prongs?
First, Intel becomes a bigger customer of its own factories. So demand that might have gone to an outside foundry before could now just stay inside Intel. Second, Intel is actively trying to win business from external chip designers, companies that are currently customers of places like Taiwan Semiconductor Manufacturing, that's TSM.
Right, TSM.
And Global Foundries, ticker GFS. Intel wants their business now, competing directly for those future manufacturing contracts and wafer demand.
So Intel's strengthening its own supply and trying to take customers from TSM and GFS. Yeah, that definitely sounds like a competitive headwind for them.
It is, and that links into the third area where there's some pushback. The company's betting big on ARM-based PCs and servers.
Okay. How does a stronger Intel, a stronger x86 roadmap, slow things down for the ARM alternatives?
Well, the ARM ecosystem has been building momentum, hasn't it? Especially in laptops, focusing on things like battery life and efficiency. We saw a lot of talk about that with AI PCs. But if Intel executes well, like they did in Q3, showing their traditional x86 chips are improving on power efficiency and delivering solid performance now, well, it makes the argument for switching platforms a bit less urgent for some customers. If the familiar x86 setup is stable and performs well enough, the push to migrate wholesale to ARM, especially for big enterprise deployments, might slow down a bit.
So the companies really pushing that ARM transition might see maybe a slower adoption rate than they hoped. Talking about Qualcomm, ticker QCOM.
Qualcomm, yes, they have big plans there. And also NVIDIA, ticker NVDA, who are also exploring ARM-based options, particularly in data centers and maybe high-performance computing.
Okay, so let's try to sum this up for you, the listener. What's the main thing to take away from how this Intel news is playing out? It seems like Intel's better than expected profit and margin performance has really created two different paths or forces in the tech sector. On one hand, you've got maybe renewed confidence and momentum for INTC itself and for its key partners like PC makers and those critical equipment suppliers.
Yeah, that's one side. But then on the other side, you have this immediate, maybe intensified competitive pressure. It's hitting the direct CPU rivals, it's affecting the competing foundries, and it's potentially slowing down the momentum for those trying to push the ARM platform forward as the main alternative. It really highlights how execution success or failure at just one huge company like Intel can almost instantly affect spending plans and competitive strategies for a whole web of suppliers and rivals all around the world. It forces everyone to kind of reassess their assumptions.
Please note that this is not financial advice or buy or sell recommendations. This is purely the opinion of the author.